First of all, let's take a look at the COVID-19 cases as of July 30th from Worldometers. As you can see, Philippines is among the second highest in terms of cases found and the third of death percentage. Philippines' GDP growth in 2020 shrank to minus 9.6%, which is the worst of ASEAN countries. In some ways, it's not surprising because we were one of the worst hit by COVID-19, despite having the strictest lockdown. Our vaccination rates also slowest versus other countries in ASEAN so far. Only 10% have received their first doses, aside from Vietnam. Between March and April, 2.1 million jobs were lost as a result of NCR+ return to stricter lockdown. As a result of the ECQ extension, the unemployment rate has risen to 8.7% primarily in the construction and agriculture, which accounting for half of the economy. However, public spending on infrastructure and social assistance, improved pandemic response, significant progress in vaccination programs and a steady recovery in the global economy will fuel growth in 2021 and the following year, according to the Asian Development Outlook report in 2021. When you consider the uptrend and recovery of employment rates, GDP growth forecast, low interest rates, and increasing building permits per year, these could be the silver linings from current situation. The projections for 2021 look promising. We should be able to return to pre-pandemic levels by 2022. This will protect us from the long-term effects of lost productivity. Estimated economy growth this year is around 6 to 7% and 7 to 9% in 2022. Why remain optimistic? Firstly, we believe that the inflation has peaked already. Second, and most importantly, is the efficient vaccination efforts. The government has said that it has procured enough vaccines to cover 71% of the population. The government have been doing great in most circumstances already. There is hope the NCR can reopen faster than the rest, while Octo research said it is possible for actually NCR+ to return immunity by Christmas, for us to have a normal December. Next is the recovery of corporate earnings. While most of the companies were able to cope with the situation and adopted cost-cutting measures, they also benefited from the CREATE law, which the tax rate fell from 30% to 25%. For the banks, they are not seeing as bad, so they are setting aside less provisions. The listed stocks in some market is in relative cheap price at this stage. There is no bubble particularly, and foreign investors are heavily underinvested in Philippines. Build to continue. It was launched in 2017 and President Duterte administration completed the following projects: 121 airport projects, around 24,000 kilometers of roads and 5,000 bridges, 369 commercial, social and tourism ports. To date, the government has approved the resumption of the construction of several key infrastructure projects including NLEX-TEX, CALEX, Cavite-TEX enhancement, Skyway extension and LRT Line 1 extension. The government also reprioritized the retaining 92 flagship projects amounting to 4.1 trillion pesos. Condo developers are expected to bring approximately 24,000 square meters of residential units to the market in 2021, with condo take-up expected to total 36,000 square meters. In last year, the supply was 25,000 square meters and 33,000 total take-up, which the current recovery can be seen. In terms of price range, 86% of take-up residents are priced at or above 7 million pesos. Nationwide residential property prices fell by 4.2% year-on-year in Q1 2021 and by 1.6% quarter-on-quarter due to the subdued demand for residential properties amid the pandemic. According to BSP, residential property prices decrease year-on-year in NCR, but increase in areas outside NCR. By type of housing units, prices of duplexes and condominium units declined year-on-year in Q1 2021 by 20.7% and 10.7%, respectively, while prices of townhouses and single detached houses increased by 8.3% and 0.2%, respectively. Top 3 trends we expect from condo developers. 1. Increasing townships. Reflecting the changes in the preferences of condo buyers in post-COVID-19 pandemic, Having your office near your home will be a great selling point. 2. The right cuts of space. Effective upkeep of open spaces, good ventilation, and right density take enough sunlight and air for natural disinfection. Developers will spend more in a better filtration system for enclosed common areas. 3. Strike the balance based on functions and new buying preferences. Condos as homes or halfway homes, or an investment. The resumption of key infrastructure projects and the rise of innovative townships will continue to attract investment. In near-term expectation, house and lot high-end condo demand is expected to rise as mid to high-level executives and expats, particularly those with families and kids, recognize the health risks of densely populated residential areas, and the benefits of larger living space with gardens will help them weather lockdowns. In medium to long-term expectations, the resulting lockdowns and mobility issues have highlighted the need of office workers to be near their place of work, which will translate to an increased demand for condo in the CBD and mixed-use developments within and outside Metro Manila. Cities and province nearby NCR such as Bulacan, North Pampanga, Cavite and South Laguna are likely benefited due to better transport infrastructure and Camapani's strategy of having offices outside CBDs. Credit from the financial institutions is expected to be less stringent once the economy is reopened. This will benefit the property development sector as more individuals are given access to collateralized credit. The new normal of post-pandemic has also resulted in work from home and online school. This will increase the demand for affordable single detached houses that with sufficient space outside CBD. The Philippine economy is extremely vulnerable to political, natural, and global financial risks. However, it is also very resilient, posting recoveries following each challenge. The Asian and global financial crises caused a drop in office rental rates, which was triggered by a drop in GDP, but they gradually recovered. According to the Asian Development Bank, the Philippine GDP growth rate in 2020 fell to -9.6% due to the COVID-19 pandemic, but it is expected to rebound to 4.5% in 2021 and 5.5% in 2022. However, leasing activity in Metro Manila has slowed further, with 53,200 square meters of Grade A office space vacated in the first quarter of 2021. Due to the quarantine and limited business activity in the country, approximately 229,800 square meters of Grade A office space has been vacated over the last year. With over 1 million square meters of office space expected to be released for the remainder of 2021, we anticipate that vacancy rates will rise even further. Businesses have had a full year to consider the effects of the lockdown on their office space requirements. While pre-leasing activity is stable, we may see a trend of tenants preferring newer properties that better meet their needs and workforce. While industries such as BPO have continued to operate throughout the pandemic, there has been a shift away from dense areas and toward work-from-home options or operations in various hubs across the country. We are keeping a close eye on how existing developments manage changes in demand for their offerings. Philippine logistic market is believed as a thriving industry with forecast of 8.2% growth rate, within this 5 years projected to reach 1.1 trillion pesos revenue by 2024. Top property firms are also engaging in logistics sector like Ayala Land Logistics Holding, Philinvest Land, and SM Investments Corp, which acquired a minority stake in country largest supply chain 2Go Group. E-commerce warehousing has taken up about 6% of total warehousing space in the country. The rise of e-commerce in the country has fueled the expansion of the warehousing market. E-commerce companies prefer to own their warehouses in the top-tier cities and outsource their warehousing needs to e-commerce logistics companies in the provincial areas. Thanks for watching. Please contact us if you're looking for buying, selling, or leasing of commercial, residential properties. We also help selling and deploying warehousing spaces. See you next time.